And I think everyone that we're expecting is either here or online.
And I wonder from your perspective, how positive it is.
It is quite echoey.
From an personal perspective, I think what I'm really looking forward to getting is some really
Brilliant. Okay, so slightly late starting. Apologies for that. So first item on our agenda is apologies for absence. Debbie, I understand we've had one apology, haven't we?
Yes, Councillor Simon Carswell.
Thank you. Thank you. We've noted that. And then the second item on our agenda is declarations of interest. And I know we have a standing declaration that a number of our members of our pension board are members of the pension itself. Are there any additional declarations of interest that we should note? I'm not seeing anything. So the next item on our agenda is to agree the minutes of our previous meeting. I'm slightly at a disadvantage in that I don't have the minutes in front of me to go through page by page. But I wonder, Anton, could you just remind us of the key points in our last meeting, and then if there are any items that any member wants to discuss, we can do so. Just as briefly as you like, yes.
Because obviously the bulk of the last meeting was taken up with the presentation and then Q&A with David Vickers.
Yes.
And then, as usual, the review of the Pensions Committee papers, the risk register, and the business plan update. I don't think, as far as I'm aware, they look accurate to me. I didn't have any problems with them.
Yes, I've looked through them. I couldn't see any inaccuracies. So, unless there are any objections to that, I will sign after the meeting. I will sign those minutes as being an accurate record. Excellent. And our next agenda item is our public question time. And I understand we do have a question. Sigurd, would you like to read out your question? We've already all seen it, but would you like to read out your question?
Do that.
At the last meeting of the Pension Fund Board on the 6th of October 2023, I asked what part the board plays in examining the possibility of serious failure in the fund if the climate scenarios on which its investment decisions relied turned out to be over-optimistic. This possibility is something about which climate scientists are increasingly worried. It is not a fanciful matter. I very properly received the reply to my question that investment decisions are made by the Pension Fund Committee, not by the board. However, there is a wider governance issue here as well, and that does fall within the remit of the Pension Fund Board. I'm always appreciative of the time and trouble our pension fund investment manager takes in replying to my questions, but I'm still no wiser about what the board itself thinks about the possibility of our pension fund failing because of adopting a traditional, perhaps unquestioning, reliance on outdated climate scenarios in preference to the scientific evidence, which is constantly being updated. Presumably, the board accepts the way the climate risk is currently being handled. This issue could, of course, be passed on to Brunel Pension Partnership, whose expertise is considerable. However, there are already some member organisations within the Brunel scheme, such as Wiltshire and Avon, that have themselves recently decided to address the issue of climate scenarios in greater detail.
Thank you, Sigurd. And I know we have a a formal written response that probably Anton has already pinged over to you as we speak.
Well, he was talking, yes.
Yes.
And I will read it out as well for the benefit of
Yes,
everyone else.
if you'd like to read it out, and then if there are any board members that want to add to that, and we can perhaps have a bit of a discussion as well, if we like.
And I should add, Sigurd, for your benefit, that when I draft these responses to you, I do always circulate them to the board or the committee as relevant. And there is often some edit and discussion prior to them being delivered formally to you. So I don't sort of create them in a bubble and no one else sees them until I speak with you. The board is content that Brunel and the third-party fund managers they employ are aware of the full range of latest scientific evidence and climate scenarios and are managing the fund's investment exposure to climate risk in an appropriate manner. At this stage, we do not believe commissioning additional climate scenario work at the expense of the fund represents good value for money. The Somerset Pension Fund remains committed to decarbonising its investment portfolio and supporting the move of the global economy to net zero.
So I think all I'd like to add is yes, it is important, but I think it's so important that it's not that we're leaving it to the experts, but we are relying on the expertise provided by Brunel and their investment managers, all of whom are looking at that. And I think, as Anton said, if we were going to look at that as well by commissioning a great deal of work on climate scenarios and Monte Carlo, looking at all of the possible scenarios that could occur, I think we would be duplicating a lot of the effort that is already happening within Brunel. I think our role as the Pensions Board is to provide a governance and oversight and to ensure that we are getting good value for money for the excellent climate work that is going on within Brunel and their underlying investment managers. Yes, we need to make sure that it is happening, but I don't think we as a board are the right people to do it. And I don't think we as a board are the right people to commission that work. It's to ask Brunel and their underlying investment managers to do that work on our behalf. I don't know whether any other board members that would like to add anything to either the formal response that we've given to Sigurd or anything that I've just said there.
I'll also point out I've now posted both the question and the answer in the chat on the Teams meeting.
Okay. But thank you for your question, Sigurd. And I think it is important that we are always questioned on what we're doing in this very important matter. Anthony.
It's probably worth also saying as well. I mean, climate is one of many risks that obviously will potentially impact the fund. I mean, I read in the news recently they're talking about, do we need another lockdown? Do we need more masks and everything else? So you think if we were to look at every single horizon risk and commission some additional work to see whether or not it's going to have any impact on the fund, we'd be spending quite a lot of money to do an awful lot of research. Realistically, the fund is built to accommodate fluctuations across various different sectors and various different risks. So we try and insulate ourselves from a catastrophic impact by diversifying the portfolio in the first place.
But thank you for your question, Sigurd.
I'll just add on that not specifically Brunel in this context, but the fund managers that are actually choosing specific investments, I always see it as their job to make themselves aware of all relevant information regarding that stock. And I'm also aware that these firms dedicate a considerable amount of resource to ensure that they do know everything possible about that stock. And in most cases, that then, by definition, means understanding the wider environment in which they operate in. and the impacts of that wider environment on that stock. And climate change is certainly one of those that I would expect them to be taking into account all the time. So a considerable amount of resource is always put into this by the underlying fund managers, knowing everything that they need to know about those stocks, and that's what investment and stock markets and the requirements of stock markets, the listing rules in terms of disclosures and everything is all about promoting that sort of flow of information.
Thank you. So our next item on our agenda is our review of the most recent Pensions Committee meeting papers. So again, I'm going to rely on Anton to take us through the latest committee meeting. Unfortunately, I wasn't able to attend that one. I normally do try and attend it online, but I was away. So I'm going to rely on Anton, if you wouldn't mind, to take us through the Pensions Committee meeting that happened on 15th of December.
Okay, so as usual, the first paper is the review of investment performance. Just bear with me while I, as ever, and I say this at committee, I'm just going to give a brief review of the whole fund results, but happy to take questions on anything else. As a whole, the fund effectively broke even. There was no real return, 0.3%. It matched its benchmark, but that does mask a lot of volatility during that quarter. Actually, during 2023, stock markets did move up and down a lot without quite often going very far in total.
Yeah.
Although there was a significant rally in November and December, which I'll specifically report on next quarter, which meant that there was a reasonable return in the calendar year as a whole. I think it's fair to say that the quarter in question was not a particularly good quarter in terms of performance of the Brunel portfolios, particularly on the equity side. Some of that is oil and gas related. They have a structural underweight to oil and gas, and those companies tended to do quite well in the quarter. They also have a structural underweight to what is sometimes referred to as the Magnificent Seven.
Okay.
Which is the 7 stocks that dominate the US stock market. So that's Amazon, Apple, Alphabet, which is the listing name of Google, Tesla, Nvidia, and I'm probably forgotten one.
Okay. Microsoft?
Microsoft, yes,
Okay.
that'll be the other one. They have a structural underweight to those companies, and they have continued to outperform. And that is a structural underweight to them as a whole, but not necessarily to all and each one, and depending on which portfolio and which fund manager. So as those stocks have continued to grow faster than the stock market generally, that's been a bit of a headwind. I think the only other thing I will just pick out, which again I did at committee, which is the graph in 14.6 showing the performance return anticipated by the actuary as part of the triennial valuation and our performance against that. And particularly because of the period around the initial invasion of Ukraine by Russia, where we underperformed that 4.6% target massively, and we've just not caught up. So
Okay.
there is still a gap there, and all other things being equal, which they never are, but if all other things are equal, then that will impact our funding at the next valuation, and indeed that's reflected in the actuaries update seen in 14.10.
I think the only constant that we will ever see in world events is that there will be something, there will be a crisis. You know, it seems that we bounce from COVID to Ukraine to now what's going on in Gaza, and always there will be something that we cannot predict. And as Tony says, that's why I don't do you prefer Tony or Anthony or Anthony? It doesn't matter. And that's why we've got a hopefully well diversified portfolio, so that we can
Yes, and
balance out those crises that are we
and
know are going to happen. We
I-
just don't know what it's going to be.
I absolutely agree that there's always a crisis. The thing is that in stock market terms, all crises
The same.
are not created equal.
Yes.
So some
yes,
crises may be a humanitarian disaster.
yes.
I seem to remember a hurricane hitting Haiti
Yes.
a number of years ago.
Yes.
Massive humanitarian disaster. Haiti is completely irrelevant in global stock market terms. You know, barely a
Yes. A blip.
a blip.
Yes. Yes.
Whereas obviously Russia invading Ukraine, because of specifically the knock-ons for global trade, particularly agriculture and oil and gas,
Yes.
sort of markets get a lot more interested.
Yes.
So,
I mean, and at the moment,
and also our portfolio, whilst diversified,
yes,
will react to different crises in
Yes.
different ways.
and the thing that's bubbling up at the moment is all of the Houthis and our response to that, and the impact on presumably the Suez Canal and trade through there. So who knows? And that's why we need a well diversified portfolio to weather those
And actually,
storms.
as an example, the markets specifically around the initial action by Hamas in Israel, and then Israel's retaliatory action
Yes.
in terms of Gaza. Stock markets very much sort of, yeah, okay, whatever.
Yes.
Um,
Well, yes, it's yes, as you say, humanitarian crisis.
but not really a stock market issue per se. Now that will slightly broaden if the issues in the Red Sea continue.
Yes,
But that's, again, it's more just that's just cost implication. And because the goods are still getting to Europe.
yes,
It's just
they're
slightly
going to have to
more,
go the long way
they're
round.
just going the long
Yeah.
way round, and it's expensive and time consuming.
Yes,
So it has implications, but it doesn't tend to have massive implications for trade
Okay.
instantly.
okay, so it'll be
they'll-
supply chain things, so it'll be an impact on inflation, yes?
Well, people will need to order goods more in advance,
Yes.
which possibly means that there's more chance that goods will either not reach destination in
Yes.
time or become obsolete in train.
Yes,
You know,
Yes.
it takes more time and fuel to go the long way round.
yes,
So slowly, I think in the short term, the shipping companies would just sort of lunch for that a little bit, but
Yes.
sooner or later they're going to pass those costs on,
yes,
and that will sort of nudge into inflation. It's more of a drip effect on the
Yes.
economy generally than an instant
yes,
break.
yes. Okay,
And obviously it's a developing thing. The
Yes.
only other thing I will highlight in that paper is typically every 2 years within Brunel, they do a new cycle of private markets investments.
yes,
We have a strategic commitment to private equity, and
Yes.
to continue to meet that, we needed to do a fresh investment. But due to the long-term nature of private markets investments, so typically you're making a commitment over a 10-year period.
yes,
I always ask committee to specifically authorise that.
yes,
And so that was requested, and they did authorise a £70 million commitment to cycle 4 of Brunel's private equity programme.
Thank you. Thank you.
Happy to take any questions on investments.
I'm not seeing any raised hands. Thank you. I think we can go on to the committee's next paper.
Which was the administrative performance. And I believe we've got Rachel and Shirley online, so I shall let them haggle between them which one's going to pick that up.
It's going to be me, Anton, Shirley.
Hi, Shirley.
Hi there. Yeah, Rachel's going to no doubt come in with anything if I miss anything or questions you ask need her input. So the performance report we provided to the committee related to work up to the end of September 2023 and in line with the disclosure regulations. So I'm pleased to confirm that in the quarter up to September 23, we had 92% achievement rate with 94% for high priority, as shown in Appendix 1. The committee picked up that deaths were at 79% though, and I've discussed this with our strategic lead in Peninsula for member services. And she confirmed that the work involved with the deaths is quite complex and a lot of communication does occur with families and solicitors, and some of the delays are caused by waiting on probate, among other sort of certificates and bits that these families need. And what we need to ensure that our team does is to move the tasks that we have along to the reply due correctly and keep them updated so that it better reflects that for the performance report that we provide yourselves. The information in relation to complaints has also been added to the bottom of Appendix 1 as requested by the board, and we also received 20 compliments in this quarter as well. Within Appendix 2, this provides the longer term performance showing up to the end of September 23, with the bottom chart showing outstanding cases after those we are awaiting third party responses are removed. So there were, let me double check. The third party responses we're waiting for are 1,369 cases. So that leaves 2,257 as at the end of September that we could action. Then if I move on to Appendix 3, this compares the amount of work received in the last year compared to the previous year. And this time it's shown a slight decrease, which is different from the recent trend. So we're just going to watch that with interest to see whether it's a blip or whether it is, going to reappear moving forward, and investigate what it is that people are asking less of us for as well, to see whether our online services mean we've had reductions or what's going on really. So we will report back in due course. The team have also been moving forward positively with McLeod, despite the regulations being late, and therefore this has impacted on final software developments and guidance from the Local Government Association. So that has caused some issues, but as far as I've been told, things are still moving forward and we're getting things sorted, and the system developments have all got closer to being finalised. Then the part that I wanted to mention next were the annual benefit statements. So those we were able to see from the numbers that we sent the majority of those out via our online services, with only a small percentage actually going by post now. And there were 43 that, due to the finalising of admission agreements, were sent out later than that date. Then we've also within the report mentioned the pension strategy, but there's a separate item for the board I think it's item 8 today, so we'll talk about it more then if that's okay. So if there are any questions, I can take those now.
Shirley, I have a question for you.
Mhm.
It seems every time the Chancellor of the Exchequer stands up and gives a budget or an autumn statement, they fiddle around with pensions regulation. And I think the latest one was the removal of the lifetime allowance. So when the Chancellor does that, how much work does that cause you as an organisation? A great deal of work, or is it just a matter of changing something on a spreadsheet?
I'm not fully involved with the annual allowance, lifetime allowance. Rachel will probably be able to jump in on this, but it is a bit of a nightmare, to be honest,
Yes.
especially because they don't tell us what's going on first. But yeah, Rachel's here to add in.
Good morning, everybody. Yeah, so I'll just jump in on that question. So I think the thing with any HMRC changes is they are very complex, and on the surface of it, lifetime allowance being removed sounds like a good thing in a way for us as administrators, because it'll mean we won't need to do that particular calculation. However, when things are removed, they are generally always replaced with something else. So to the honest answer is we're still waiting to see how that's going to be replaced and what different calculations we're going to need to do. So the likelihood is, yes, it is going, but the likelihood is there'll be something that will replace it, that we'll have to do another type of calculation. And obviously, yes, that creates more work.
Thank you. Thank you.
Okay.
And I suppose, you know, you get no more notice than everybody else in the country. And sometimes he'll say that change will come into play maybe at the beginning of the next tax year. And sometimes he'll say this takes effect immediately. And I can just imagine all of the administration in all pension funds throughout the country just tearing their hair when he says something like that. He likes to bring a rabbit out out of the hat every so often, doesn't he?
Absolutely. And yes, you're quite
Yeah.
right. We don't get any extra notice.
No.
And what we've had with this one is that the Labour Party have also said they may well reverse it if they come into
Yes.
power. So
Yes.
that adds complexity to those that are sort of like looking at what changes they should or shouldn't bring in
Yes.
from
Yeah,
a software point of view as well.
All of the work involved in removing it, and then all of the work involved in putting it back again with the next administration. But thank you for that. That's given me quite a good insight. Yes. And any other questions at the moment? We have got our own agenda item on this, but yes, Rachel.
Shirley, Rachel, can I just say thank you for adding the complaints in now? And I think it's really useful to see that they're obviously very serious to the individuals, but they're not major, are they, in terms of what's going on in your world? So thank you very much. It's a welcome addition as far as I'm concerned, and really good news that there's 12 down to 3 for the number that you're of transactions that you're dealing with. That is a really, really good result, I think, for you, that there's so few.
You're
Thank you.
welcome. Thank you.
Yes. Yeah. Thank you. And if there are no further questions at the moment for Shirley and Rachel, you can have a bit of a break, have a cup of coffee, and we'll see you again later for our agenda item. Thank you.
Thank you.
So the next agenda item for the committee was their business plan.
Yes.
Main item of discussion under that effectively is circling back to exactly what you've just said about the Chancellor announcing things in the autumn statement.
Yes.
Or quite often not announcing them in
Yes.
the autumn statement, but releasing them in the papers,
In the papers,
that
in the
accompany
book.
them, which
Yes.
is even more annoying because
Yes.
he hasn't, you can sit through him and he talks and you think, oh, he's forgotten us.
Yes.
Hooray.
Great.
No, not at all. So the government put out their response to the consultation that had happened earlier in the year regarding next steps on investment in the LGPS.
Yes.
Well,
And this is the, requirement to have 5%
Yeah.
locally invested, yes.
and things like, and well, there were, in fairness, there were a raft of measures covering some areas that weren't controversial at all and some that were very controversial.
Yes.
I suppose we shouldn't be surprised, and in keeping with many a government consultation, in that, broadly speaking, it's not what actually was in the paper, basically, but the substance of it is we've heard all your responses, and we're going to ignore them and do it anyway. Even in areas, there was one particular area where there was 80% in their own response, they noted that 86% of respondents were against the change. And they said, yeah, but we're still going to do it. There is some softening of the line. So it sounds like there'll be a lot of comply or explain rather than legal enforcement. And obviously the devil will always be in the detail of the regulations or guidance as and when it's issued, and it hasn't been yet. But yes, effectively the government has not been swayed by the sectors, because it wasn't just us, it was the sector.
Yes.
Broadly. The response we put in was broadly in line with what the majority of the sector, as I understand it, put in.
So in the case of pooling, there are still some local authorities that have not fully pooled, or certainly not pooled as much as we have in
Yeah,
some respects.
so we're at 93%.
Yes.
I think across Brunel, I think we're in the mid-80s or something.
So
I-
in
and
the case of ones
there are
that
those.
haven't,
Yes.
yeah, what sanctions, what stick does the government have? So if we decided as a board, as a committee, as a council, we decided, no, we're not going to invest 5% locally, and we just said no, what sanctions could the government bring to bear on us? Or could we just say, no, we don't fancy doing that?
So as I say, my understanding is that they will be moving very much to a comply or explain regime. Under the current investment regulations, there is a paragraph that was put in after as part of the initial creation of pools and incentivization to do it. There is a paragraph that I will not quote it verbatim, but the broad thrust of it is, if you do not manage your investments in a way consistent with government policy or something like that, we have the ability to come in and direct them for you. So they although they have not chosen to do it, although there might be an argument as to whether they actually have enough civil servants to do it, they already have the ability to just wade in and take the decisions off our hands and do it how they deem fit. So the sanction is already there.
Yes.
And as I say, it is that paragraph is extremely broadly worded. So
Yes.
it's not if you don't do pooling, it's if you manage your investments in a way that we don't like.
Good heavens. Right. So quite sweeping powers.
Yes.
Really?
Yes.
Quite sweeping powers.
They have quite sweeping powers, but it was noted at the time that these powers were ridiculously sweeping.
Yes.
But to date, I am not aware that they have used them in any shape or form in any context. And I think it probably is reasonable to assume that they will use them quite sparingly
Yes.
going forward.
And with their comply or explain method, we can always come up with a justification of why we don't think that's a good idea, and that's our explanation.
Yes.
Yes.
And in the context of pooling,
We think it's a good idea.
we haven't and we won't.
Yes.
Or I think it unlikely that
Yes.
we will. In the context of the
5% local.
5% in local investments, local being defined as UK, and 10% in private equity, then those are conversations we will have as we go.
Yes.
I mean, I think in that context, it's quite fortuitous that we're going to be looking at strategic asset allocation this
Yes.
year. Because we can wrap those discussions into that. Although I'm not necessarily sure that the government's guidance or regulations as applicable will be out in a timely manner for us to incorporate them sensibly.
No, but we
But-
can
well,
sort of predict what they might say, and we can move in whatever direction we choose, but we can move in a direction that won't cause us too much bother when the regulations do appear.
Yeah, one of the things specifically with the local investments, one of the things we need to see from government is better clarity as to what they think will apply to that. And then as soon as they do that, Brunel or us with Brunel's help will go through our current investments with a
Yes.
fine-tooth comb and suddenly proclaim that of the 5% they're looking for, we're
We're
already
at
doing.
4.98.
Yes, well,
Yes.
that would be great, but I
Yes.
think it's probably more likely we put somewhere around 3 or something.
Yes.
But we will proclaim a figure.
Yes.
And it should also be noted, and I sort of made this point in committee, and it goes back to what I was saying earlier about the commitment to private equity, and that we, under our current 5%
Yes.
strategic weight, we've undertaken. The manner of private equity is that you tend to go in commitment cycles. You make a commitment.
Yes.
It takes a number of years for that commitment to be drawn, and you will then typically, if you've got several
Yes.
cycles of commitments,
Yes.
your older commitments are starting to return capital
So
to you.
yes, you're
And-
leapfrogging. if
Yeah.
you like. Yes.
And so even if we proclaim next year that we're going to adhere to their 10%,
Yes.
and that would change our strategic asset allocation to meet that, it could well take somewhere between 6 and 8 years before we actually move from 5 to 8
Yes.
to 10%.
Yes.
So it's not, oh, we've made that. Whereas if we made that decision with listed equity,
Yes.
we could
Buy and sell on the day.
we could
Yes.
enact it within a very
Yes.
short period of time.
Yes.
With private equity, it takes
Yes.
time.
And with their comply or explain, we can say, yes, we're moving in that direction. Look,
We've changed our strategic asset allocation, and
yes,
you know,
we're doing it.
we're
Yeah.
doing it, but
Yes.
it is, and so again, I find it interesting in the government context where their mindset usually is sort of, or tends to feel like 2 to 3 years maximum. Some would say
Election cycle.
5
Yes.
election cycle.
Yes.
Private equity, private markets in general,
Yes.
just move a lot slower than that.
Well, and pensions move a lot slower than
And-
that as well.
Yeah,
And
and
should do.
And yes, we could accelerate considerably, but as I say, you don't want to have one cycle that's massively bigger, because then you just get in trouble when that cycle unwinds. So you
Yes.
want your cycles to be broadly similar in
Yes.
size. So for our current 5% target, I think we did 60 million to the cycle 2 Brunel private equity. I can't remember if it was 60 or 65 for cycle 3, and now we're doing 70. So it's
They're
broad,
incremental.
they're
Yes.
broadly similar and effectively reflecting sort of inflation and the
Yes.
growth in the fund overall more than anything else.
Yes. Thank you, thank you. I'm sure in the committee's business plan update, they talked about training, did they?
Well, the training is on their agenda. We had a brief
Yes.
discussion.
Okay, right. Yes,
It wasn't relevant to the specific point of
business
working
plan.
through the
Okay,
business plan or
I'll-
the work of the business plan.
I'll wait till you get to that bit. Yeah, that's fine.
Because I suppose there is a overriding assumption that, or work plan on my part, that any time I'm going to get committee to make a decision, inherent in that is ensuring that they understand the
Yes.
decision they are about to take,
Yes,
at least to the level appropriate.
yes,
And training is provided to ensure that happens. And obviously, you know, in a training context, the board is always treated equally.
Yes, yes.
So anything I
but-
provide to them,
Yes,
you are going to be asked to come to as well.
yes, fantastic. Yes, because I can see that over this next year, we're going to need a lot of training
Well, that-
on diversification and
Effectively,
asset allocation.
as the way it will work with that strategic asset allocation piece is we'll probably have, I need to get my brain around it because the year's started now and
Yes, I know.
2, maybe 3 informal sessions.
Yes,
And the first one of those will probably feel like 80% training and 20% discussion
yes.
and thoughts. And the last one will probably be more the other way.
2080, yes, yes. Oh,
Um,
that's great, yes.
Because effectively, we start with a blank piece of paper, and at the end of it, I want sufficient information from the committee and board members to go away and write the strategic asset
Yes.
allocation. So that when it comes to committee, yes, there's a discussion in a public forum and everything, but
Broadly speaking,
broadly speaking,
people know
what's-
why and
well,
what, yes.
and what I've included in it is what they want me to include
Yes.
in it, such that they agree,
Yes, yes.
rather than me randomly just choosing some stuff out of the air and chucking it in and then saying, no, that's not what we want.
Yes, might make for a
So
long meeting,
It's an
yes.
iterative process.
Yes. Fantastic, fantastic. Right, is that all we need to say about their business plan update? Probably.
Yes.
Yeah.
I suppose I'll just update you briefly on where we are with external audit.
Yes,
The formal report of the external auditors went to the September audit committee. I may
Yes.
have told you last time. There were no substantive findings. And we're just working through the process and waiting for them to give their final formal opinions. I believe, because they always won't do that until they have signed off Somerset County Council's, and in the context of last year, it is the County Council, next year it'll be just Somerset Council, accounts. I think that's going to happen at audit committee this month.
okay,
So I think I will get the audit opinions later this month and then be able to complete the annual reports and publish that as a final document rather than a draft or anything at the beginning of February.
okay.
That's what I'm anticipating.
Okay, I mean, we're probably all aware of the budgetary constraints that Somerset is working under at the moment. What, if any, impact on the pension fund will Somerset's financial situation have?
It's interesting because I've actually been asked that from the other side.
Okay.
What can you do to help? The answer is virtually nothing.
I'm very pleased to hear that.
Because the reality is that obviously the valuation cycle is a 3-year cycle. The actuary has produced their rates and adjustment certificate under the regulations that is legally binding. So the county council has to pay those contributions. There is a process by which the council, as an employer, and that's open to all employers, can ask the actuary to do a new rates and adjustment certificate. Within the funding strategy statement, there are criteria under which we would allow that.
Yes.
And without meeting those criteria, in theory, we wouldn't allow
Yes.
reassessment. However, as per what I said earlier about the investment returns relative to the actuary's target and the update the actuary has given us on funding,
Yes.
I think there's a fair chance that if we ask them, if we acquiesce to the Somerset Council getting a fresh update within mid valuation cycle, I'm not sure the answer would actually make them
Help.
happy
Okay.
or help them. So in that context, my understanding is that there will be no action.
Okay. And if we go the next step, and there's the section, I forget what
Section
it
114
is.
notice, under section, my understanding of section 114 is pension contributions are protected and will be paid.
That's all good news. Thank you.
And I suppose I should re-emphasise, just for the general good, that although the pension fund is not a separate legal entity to the council, which is something that's badly understood and very difficult to explain, we are under the regulations required to keep all monies completely separate, and the fund is not allowed to borrow or lend with any of the employers within the fund. Obviously, there is a slight element that, in theory, a debt is created as soon as payroll is paid, and they have until the 19th of the following month to pay that payroll. So there is a debtor there to the fund,
Flow,
a cash
yes,
flow
yes.
debtor. But in terms of structural within a
Yes.
treasury context, they can't borrow or
So-
lend from the fund.
So we couldn't, for example, invest in a major project that Somerset Council needed funding.
The council cannot direct us to. The pension fund can choose to. I would always
Yes.
caution severely against doing
Yes.
so. Now, if we have agreed to participate in a given Brunel portfolio and the fund manager that's been delegated
Yes.
to run that chooses,
Yes.
having done the normal
due
due
dil-
diligence,
yes.
to invest in something that it happens to benefit the
Yes,
council or be a co-investor with the council, then fine.
yes,
That is significantly different to us going,
yes.
yes, the council invested in that, so we'll bung in another 20 million just to.
I'm really pleased that there's that
That's-
separation from
It's
church
some-
and state, if you
yeah.
like, yes.
That's
Yes.
something I've always been very keen to advise committee members
Yes.
to steer well clear of.
Yes.
But ultimately, it is the committee's decision.
Thank you. And I know, I'm aware that was a segue, but thank you. Rachel?
And can I just follow on from your question about the impact of the council's financial situation? Anton, am I correct in thinking that the next actuarial valuation, on the basis that we may have a significant number of people going into pension earlier than anticipated, and that might impact presumably the employer contribution and the valuation in future years?
So,
They have to pay, don't they? Have to pay a,
yeah, there's
yes,
two parts to
yes,
this. So if someone happens to retire, chooses to retire because the council's whatever, then in theory, assuming the actuaries' sums are correct, all the actuaries' assumptions are right, there's no impact of that person moving from an active to a drawing member. Under the regs, if someone is made redundant after the age of 55, they are entitled to unreduced benefits, so their benefits would not be reduced for the fact that they're taking their pension early, and the employer has to make up the cost. Generally speaking, the employer is expected to make up that cost instantly, upfront. There is a provision that the Section 151 officer of the council, with his administrating authority hat on, i.e. on behalf of the pension fund, can choose to agree a payment plan for those strain costs. That would I would certainly be very upset if it was beyond 3 years. I don't think we've ever done one beyond that. I mean, actually, if I go back 6 or 7 years, then they were always done on the bit on the Never Never, but the policy has changed. And so the default is that it would be, the strain would be due instantly in full to the fund.
So where we've had this, last year's pension increase was in line with CPI and was, I can't remember, 9-10% or something. Is that built in, or would that be a hit that couldn't have been foreseen?
So there's two elements to that, as always seems to be. So when the actuary makes an assumption about inflation in general, they're looking at 20-year inflation. And so the movement in that is much smaller than the short-term movement we've had. So the overall impact of the change in assumption is very muted. However, there is an impact on the fact that you had let's say it's a one-off for the moment, a one-off substantial increase from 1st of April 23. And actually, I think I could look up what the September CPI figure was. Was it 5.5% or something like that? That'll be, and so that will be from April 24. So the instant impact of that is reflected in the actuary's funding update, and is part of the reason why it's not improved since the last. Because obviously, yeah, if pensions in payment go up by 10%, that is expensive. But also, all the deferred pensions get adjusted up by 10%. So it just stays in the number forever.
Yes.
I mean, that's why inflation is bad for pension
Yes.
providers.
Yes.
It's expensive.
Yes.
Yeah. So that,
Thank you. I think that's probably all we need to talk about the committee's business plan update.
Yeah.
So their next agenda item, finance and
Uh,
membership statistics.
yes, and the membership statistics are there, and they are what they are. Unfortunately, the financial position is not updated because we still don't have sufficient data in the new finance system that we can actually get anything of meaning out of it.
Okay.
We did have a discussion about that and the reasons for that. And the providers of that system and people who are working on it, and I keep badgering them, and they promise me that it's all going to be all right for
Yes.
year end. And I am nervous, but I'm sure will find a way to get there somehow.
Get some data out that is
Well,
meaningful, yes.
But as I say, the issue is, it's not that the system isn't working, it's that the data hasn't been put into it
Yes. Yes,
yet.
okay.
And there are specific reasons with that, and I am working with the people who do it, and
I'm sure you're on it.
well,
Right.
and there is an implication, because if the pension fund's audit process is delayed, the assurance that the pension fund's auditor gives to employers' auditors is delayed. So if there's a problem with the pension fund accounts, then Somerset Council accounts are going to be impacted. There is a
And all of the member employers,
yes.
yes.
It's not that there really is no incentive for them to not sort
Yes,
this
so
ASAP.
they're,
And
I'm
everyone's
sure
aware
everyone's
of it.
getting there.
And
yeah.
but
It's a big
and-
ask, yes.
well, and some of us have been around, and I look at Rachel, long enough to remember the last time we brought in a new finance system, and it was a bit of a dog's breakfast. And it took us a few years to really get on top of it and get the most out of the system and
Yes.
everything. And lo and behold, we've done it again, and it's a bit of an issue. And I think one of the things that I find odd is, because of the circumstances, we always seem to rush the implementation. I absolutely understand why we wanted a new finance system from 1st of April 23, and the benefits that brings in terms of the unitisation and everything. But that implementation project should have had another 6 months.
Yeah.
If they'd had another 6 months,
It would have been better.
it would have
yes.
been a lot closer to ready than it was.
More haste, less speed. Yes.
But
Yeah.
it is what it is, and now
Yeah.
we'll find a way to
Yes,
get through it.
yes.
It's always more complicated than the partners think who are supporting us, I find. And we didn't have enough time to allow
Yes.
for those added complications and bumps in the project, unfortunately.
And if I'm being cynical, you always move from a provider that's in sales mode and says, yes, it can be
Yes, of
done.
course,
Yes,
we
it-
can do that.
we can do that. Yes, we can do that. Can we have that? That'll take another X amount of time, and then oh, you've asked for that as well, and we need to work out how those interact. And yeah,
Yeah. Yes. Okay, so we'll watch this
I
space.
suppose the flip side of that is that the pension funds part of MSD, because we have a completely segregated part, is much simpler than the main councils.
Yes.
You know, we run on something like 150 ledger codes.
Yes.
I think the council runs on 2,000, 3,000.
Yes.
I have no idea.
Yes.
Just, so, and the council are choosing to, for very sensible reasons, have sometimes 3, 4 or 5 different codes attached to a given transaction. Pension fund doesn't need that.
Yes.
2's fine for us.
Yes.
We just need to know which employer it applies to and which sort of general ledger code.
Yes.
So our whole setup is massively
Yes.
simple,
So-
and
so-
therefore the problems should be simple to fix.
So we can have fairly sure confidence that we're okay in moving through this system, and the rest of the council's finance system just needs to catch up with us, really.
No, we just don't need the level of complexity
That they've got.
that they have
Yes.
to have.
Yes.
And you know, also, how many staff use the council's part of it? I think there's only 15 staff that can see the pension funds one.
Right.
So everything's smaller, more
Yes.
contained, easier to manage.
Great. Well, I think therefore we're on. Well, should we hop over the committee's review of the pension fund risk register?
There's
Because
nothing
we've got,
in it.
there's nothing in it, and we've got it on a standing item on our agenda anyway. Yep.
And then, so the only other item is the
Knowledge and skills.
knowledge and skills. We had a discussion about the Barnet Waddingham programme, which is a general, non-specific way of upskilling.
Yes,
You should have all seen the link. It was
I've got
reissued.
it. I've got the app on my iPad. I haven't
Have a go.
done any of the modules yet, but I've got the app on my iPad. Yes.
Have a go and go through it. Most of that stuff should be stuff, because it's sort of broadly general in nature, although specific areas will be approached differently. It should be stuff that
Yes.
we've touched on in the induction training I provided you.
And there's a self-assessment bit at the end. It's not pass or fail. We don't get chucked off committee or
No,
board if
no.
we don't pass, but it gives you and Barnet Waddingham an idea of where we need collectively upskilling.
Yeah, and
And then,
also,
so then we'll be provided on training on
Yeah.
those aspects.
well, and also it provides an audit trail that we can put note that it's another piece of training you have undertaken.
Yes,
Yeah,
yes,
part of our policy, and this is one of the areas that was non-controversial within the government update. You know, more prescription on level of training for committees and boards. So it's important that we can demonstrate that you
Yes.
do training
yes,
as much as have a policy saying you do training.
yes. Is there any deadline on when we should
No,
have?
not particularly. I mean, obviously, my understanding, because I haven't been on the website and I'm not going to do the training,
No,
is that there's just 2 modules on there, or is it 3? I stand corrected. There's
well done,
3.
Rachel. You've looked at. Well done.
If you did them by the end of March, then when I ask Barnet Waddingham for a data dump so I can put something in the annual report, it will be shown.
Okay.
That's not a you must. I'm just saying that's a nice way of me
Yes.
putting a nice tick next to your name in,
Yes.
say you've done it in the annual report when we get there.
Rachel.
I was going to ask, is there going to be a regular update of I'm not saying name everybody, but a sort of overall take up and
So yeah, so
evidence of what we've done.
I will annually basically get a report from Barnet saying who has done what. And that will then form part of the disclosures in the annual report. And similarly, my understanding is that Barnet's do plan to add additional modules. Although that reminds me of something else I should just mention, which is that the actuary contract is currently out to tender. As in, it's been out to tender, we've had responses. I've been part of the scoring panel, I've scored those responses. We had a full day moderation meeting on Wednesday this week. We're doing it in conjunction with Devon because Rachel and Shirley do not need to have to deal with two separate actuaries. They need one firm with one website and one set of processes. So we're doing it as a joint procurement with Devon. And so I'm just now waiting for their procurement team, which are leading it, to collate everything. And I think a standstill letter to the successful firm, which I don't know which one it is because I haven't seen the pricing because that's the way that procurements are done, will probably go out before the end of the month. Because our current contract comes to an end at the end of March.
Okay.
Although with actuaries, there's always there's a general acceptance that if a piece of work has been started, that the actuary that started it will keep going until they finished it.
That makes sense, yes.
I did have one piece of work because it was involving a government department, I could say cynically, that took about 18 months to 2 years after the handover. The old actuary was still working on it. That's when the probation boards went into a central, came out of the LGPS and went into a central government fund, and there was a transfer. And because they owed us lots of money, it got paid over a 10-year period.
Yes.
Which again was annoying because I would get this sum of money turn up every April and we'd all look at ourselves and go, what's that?
Yes.
Well, why have we? Oh,
I
yeah, no, I
remember.
remember now. I'll look at, yes, it is the right amount.
Oh. Oh,
So yeah, so you can have items that sort of spill over.
yes.
But yeah, so hopefully, well, I would anticipate at the committee meeting in March, I will be able to pronounce who our actuary for the next, I think it's 6 years.
6 years.
Actuary contracts, it makes sense to do them in
Yes.
lumps of 3
Yes.
for an actuarial cycle. And obviously you want to time it so you don't terminate on the date of an actuarial valuation. So so yes, it's a 2-year thing, which unfortunately probably means I'll get to do one more tender of the actuary before I retire.
You can look forward to that.
Well, I've only I think I've managed to sort of stretch them out that I've only done 3.
Okay.
But
Okay, so that brings us to the end of the Pension Fund Committee agenda. So back to our agenda. And I think we're on our agenda item 6, which is our review of the Pension Fund Risk Register. And as Anton has just mentioned, there aren't many changes to
well,
it.
there are, but there aren't.
Okay.
So there are a number of changes since the board's last meeting.
Yes.
Reflecting the discussions that was had in informal session in
Yes.
late October?
I know I was there. I can't quite remember when it was, but
Yeah.
yes.
So the risk register was updated for those
Yes.
in time for the committee, but this is the first time those changes are reflected in a paper that the board has seen.
So perhaps you could take us through that. Now, I know there was something that you added into the introduction about reputational risk and the reasons why we need to have a risk register.
Yes, so that was in the introduction paper in the committee.
Yes,
I don't think I've included it
No,
in the
don't worry.
board flow.
don't worry.
So I might have to have another look at that in the
Yes,
next
okay,
cycle.
that's fine.
But yes, there is a general statement that all of these risks come with a reputational angle as well as a absolute risk in itself. So yes, there is an impact if we don't pay pensions on
If we
time,
don't get it right, if we don't do our job properly, yes.
but there is always a reputational risk. The main changes were the addition of 2 new risks, one specifically addressing the accounting of the fund as a standalone risk, and then a additional risk around data protection,
Yes,
GDPR, and various associated bits. So that was effectively split out from sort of more general cybersecurity. And then there was some tweaks and updates to a number of the risks.
mainly in terms of wording and
Yes.
semantics, weren't they?
There
Rather
was-
than what we were looking at.
Yes, there was one risk where we split something out to make it more specifically relevant, and I can't remember which risk it was now.
And you were in that meeting as well, weren't you? Were you in that meeting? Well, we talked about the risk register.
The informal one.
It wasn't in a
No,
committee meeting.
No,
it was
we
in
had a standalone separate meeting that we did on Teams.
Oh,
But I,
it was a good one.
as I say, it was 4 months ago.
I know. I'm sorry. I'm sorry.
If someone wants to go through the risk register and tell me what I've
Yeah.
changed,
I'm
Rob was there.
You were-
The only thing that I can remember is the business about the IT.
Yeah,
Yes.
That was the important.
that was the major one.
Because you were worrying about things like hacking and all sorts
Yes.
of other things.
I've got a feeling it was something to do with employers, but I
I think you're right, actually. I think, wasn't it to do with, wasn't there somebody?
Rod, can you put
Oh, sorry.
your microphone on?
Wasn't it something to do with that? There was somebody attempting to circumvent or something out of the pension fund, or there was a risk with. There was a firm, I think, with some involved with a firm that was with homes or something. I don't know, care or something.
No, I can't remember that. Long cycles.
Yes. We had a very good deep dive into the risk register, and I think we decide at the end of that informal meeting that we would try and do that every couple of years.
2 years.
3 years, 2 years, 2 years, I
2
think.
years only.
Yes. So although it's a standing agenda item on our agenda, what we will try and do is periodically, as both board and committee, get together and deep dive, probably into all of our papers, really, all of our reports, every area of our work, informally out of committee or board, get together as 2 committees, 2 boards, to in-depth discuss, and then we can bring our findings back to either board or committee. So we've done that now with the risk register, and that was a really good meeting. And we've made some changes, some updates, improvements, I hope, to the risk register. But other than those changes that we made in the light of that meeting, I don't think there are any fundamental changes to the risk register.
No, what if you turn?
Sorry.
Okay.
So no, and in terms of sort of risk scores, as I say, there were some tweaks as part of that, but there has not been any changes to the risk scores between committee and now. So we're sort of at steady state again. And the only thing I would say, obviously, the needs of the committees and boards business plans will always drive what we spend most time on.
Yes.
And so there would not necessarily be a specific time that we look to re-deep dive the risk register, but there is an appreciation that we should do it periodically, and
Yeah.
that may be driven by either a change in committee or board personnel,
Yes,
or a change in circumstances, or because we don't have pressing business elsewhere.
yes,
As I say, this year we wouldn't do that because investment strategy will be the focus.
yes, yes. Yes, and I think that's the way we left the meeting, the informal meeting, was that we'll keep it on our radar and periodically have another deep dive on the risk register, but that will probably be every 18 months to 2 years that
I
we
think the
do
only other
that.
thing that you had really was that you made some comparisons with some of the other groups that were also involved, and I think we looked at that as well, didn't we?
Yes, there was another number of. We looked at the risk registers of a number of other
Yes,
local authority funds, not in a context of presumption that theirs are better or worse than ours, but just to use it as a way of sense checking for risks that we currently didn't cover. Indeed, the accounting and the specifically the accounting was one that was picked up in that review. I think the GDPR, the data protection one, there was enough people keen on it that
Yes.
that would have come on whatever.
yes,
But it is a good way of sort of sense checking. And it also allowed us to have a debate about the style in which we present the risk register, because a number of those other funds have risk registers that run to 30 pages.
yes,
And that's not because they've got more risks, but just they cover a lot more information on their risk register. They sort of do a page per risk.
yes.
But it was agreed that the level of detail was
Yes,
in line with what everyone
Yes,
felt was appropriate.
I like our style.
Just one question I would ask is, how do we get comfort around we've obviously got inherent and residual scores. There's an assumption that the controls operating are bringing those scores down. We obviously have no visibility of what the controls that are implemented are or of their effectiveness. Yeah, sure. I was saying, so we've obviously got a risk register looking at inherent and residual risk, and that relies on the implementation of controls, so things that will stop those risks from occurring. The residual scores are generally what we're focused on, saying what are the things we need to worry about. But we obviously have no visibility of what the controls that were implemented are, and there's nothing documented in here about what those controls are or who was validated to confirm they're operating in line with expectation. So I suppose, is there an opportunity or some way to get an understanding of how we've come to the conclusion that our controls are as good as we think they are? And are we ever independently validating any of those? So some of the more material risks, some like the GDPR, for example, have internal audit ever done anything over those areas to give us comfort that actually we do comply with things like right to erasure, right to request your information and the likes, and that the council or the pension fund are meeting our obligations in those areas?
So almost like a disaster scenario planning. Do you mean, making sure that the controls are in place to
So what you just
mitigate
described
those?
there, so in the case of IT disaster, you'd have disaster recovery testing to confirm our systems will recover in the speed that we expect them to, that we actually know what to switch on when to make sure the data comes up as we expected it to. For some of these things, they're quite abstract, so civil continuity plans and that kind of stuff. Yes, we've got something documented and we've done desktop walkthroughs and we think we know what we're going to do, but just like the pandemic, we find actually they're woefully inadequate when we actually use them. Some of this stuff we could be a bit more further ahead. So like cybersecurity, we're saying actually we think it's a residually low risk of cyber attack. Is that because we've had external penetration testing undertaken, which has told us actually your controls are in line with industry good practice? Or are we taking the word of, say, the IT manager for the fund to say, yeah, we're comfortable, it's okay, but we've never independently validated that position?
So what controls are in place? Who's responsible for them? How have they been tested?
And obviously that changes from risk to risk. And so in terms of most of the sort of process IT type risks, then it is sort of internal audit typically, type testing and again, with some of these things, so with the cyber security, to use that example, it's explicit that SCC, sorry, it says SCC, I need to change that, I've just noticed that, and DCC. Yeah, this is a Somerset Council laptop, and the cyber security around that is governed by Somerset Council's policies, etc. We are piggybacking. We as a fund probably don't do any work to validate that. Whether Somerset Council do or not would be dependent on what members demand from the correct scrutiny committee or audit committee around that. However, and I'm sure there is a nice written policy and there is nice written things as saying what validation or testing they have done against it. Also within IT security, there would be contractual requirements on third parties. So both Peninsula Pensions member database and the investment accounting software we in the investments team use are externally hosted by a third party company. So other than the secure link via the internet to those systems, our own IT aren't actually providing the firewalls around them. So then you are to some extent reliant on contractual obligations and guarantees of the third party software provider. But the other one extra layer on that is part of your terms of reference is you can request internal audit or investigatory work on any aspect of the fund. So if it's something you specifically as a board are concerned about, then raise it and tell me how you would like it investigated, and I will go away and arrange that and for the report to come back to you.
So I think we have to be on the ball enough to think about what are the unknown unknowns, what risks might happen, what mitigation have we got?
What are you worried about, or what area do you feel the controls might not be up to scratch?
And I suppose that's the major part of our job, really. Yeah.
Yeah, so my proposal for this committee would be that certainly anything that's inherently considered amber is something we'd want at least some minimal level of comfort that the control environment is effective. We propose one method of doing that be to compare what the county or the council are currently rating those areas from their own perspective in terms of risk. So I don't know if we do that analysis and whether or not they capture the effectiveness of their controls against those risks. But if they do, I would use that as a baseline to try and make sure we're assessing our risks correctly. If they don't have that assessment, I think my personal view is investment performance and personal data are the two highest risk areas that are under our purview. One of those we've got very little control over in terms of investment performance, because obviously it's linked to the markets. But in terms of personal data, I think we should be looking to get at least a base level comfort that personal data of our members is actually managed and secured in an effective manner.
So that's a really good idea, Anne, that maybe the one way to investigate what controls are in place and are they effective is to ask Somerset Council about data. What controls have they got in place in terms of data protection, GDPR,
And
etc.
Devon, I think Devon.
I was going to say, so in terms of GDPR, I mean, in terms of data generally, I do not really hold any data that is not FOIable. But Rachel has her hand up. And certainly any work on personal data would heavily rely on
On Peninsula.
Peninsula and
Yeah.
Devon, so I shall pass over to Rachel.
Rachel.
I thought I'd best put my hands up as we have lots of data. Yeah, I can actually share with you if you would like. We've had a cybersecurity audit done over the last year, and that includes for Devon. It was done separately, so for Devon County Council and also for Haywards, the software providers. Haywards actually have got the ISO certification, which is the top level certification you can have, they tell me, with cybersecurity. So I can provide
Sorry,
a
Rachel,
copy of that.
who are Haywards? Where do they fit into the
So Haywards
relationship?
are our software provider.
Right.
So they hold the data. They are responsible for keeping it safe for us. So the contract that we have for administration system is with Haywards. So I can provide that information if you're interested, because we've just, like I say, done had an internal audit. It was nearer April last year that we had that, but they also send us annually disaster recovery reports and penetration testing to show that they are keeping up to date, if you like, with cybersecurity, because it just changes all the time, doesn't it? As I'm sure you know, and there's always different types of attacks. So I can provide anything that you decide you would like to see.
So shall we ask for that at our next board meeting? Would that be useful information, Anne?
Yeah, absolutely. And it would be good to see as well the scope of what that review was. So obviously the outcome is really important, but understand what the scope of that review was as well would
Yep.
be really useful. So yeah, that'd be great. Thank you.
Yeah,
Okay.
that would be great, Rachel. Thank you very much. That's great.
You're welcome.
What better than we've just done one?
Yeah, yeah, fantastic.
And yeah, effectively, you did pick it out to some extent that the only ones where the long-term target score is amber are two risks that it's quite difficult for us to control. So one is risk of regulatory change, which is a considerable risk because the government change the regs all the time. And then obviously incumbent on that is then how we interpret and implement that. And when you've got something like McLeod, the data issues are massive. And when you've got something like pooling, then the data issues aren't massive, but the complexity of setting up a new company and getting it running were quite considerable. So there are, risk of regulatory change and the impacts of that are often considerable, but it's very difficult for us to put in place wholesale mitigation because it's more on a project by project basis. And then the other one, as Anne pointed out, is the funding risk overall,
Yes.
which is inherently complicated, difficult, and why we're all here.
Yeah.
Just that, I mean, ultimately, the whole point of a pension fund is to manage that, or a defined benefit pension fund is to manage that risk of what future pensions you've promised and making sure you have sufficient money to meet them.
Yes. And well, yes, as you say, the fundamental difference between defined benefit and defined contribution is we carry that risk rather than the individual member carrying that risk. And that's what makes a defined benefit pension scheme gold plated, if you like, that we are carrying that risk and not relying on the member
Yes,
having to do that. Yeah.
that's why it should be classed as gold plated.
Yes.
I think the general perception in the world is also that the pensions involved are massive, which in some cases is true,
Yes.
but in many cases is not. I
Yes.
remind people that the average pension in payment is about $4.5 grand a year,
Yes.
which I don't think anyone would describe as a massive amount of
No.
money.
No. So not gold plated in that terms, but from
Well,
a
I think-
risk management point of
yes,
view, yes.
Absolutely,
Yes.
but I just want to make the distinction for the record because there are various newspapers and media
Yes.
outlets that often refer to gold-plated in a context that we're all massively rich.
Yes.
And I don't think that's true.
No. No. Does that bring us to the end of our review of the pension fund risk reg?
Support this, Anton and his colleagues. And Anton himself in this meeting has referred to only having
Yes.
one more actuarial
Cycle,
evaluation.
yeah.
I think, which I think highlights the succession risk further. Anton, is there anything happening on that? Have you got a fantastic new graduate working with you or anything?
No, but it is inherently caught up now in the wider review of structures and teams across the council. You know, I've raised it with the appropriate people within my management hierarchy. Conversations I've had with them clearly indicate that they have taken it on board and understand it as a risk that needs managing. Quite how that will manifest itself is complicated, because in a pensions context, there should be budget, because effectively, one, it is within the section 151's prerogative to say, to deliver it, I need more resources. But then I wouldn't, as I report that back to committee, I would expect their support, and they've indicated their support for sort of more depth and more succession planning. So I don't see that as a budgetary issue. But I don't just run that, and I run other parts, and those other parts need succession planning as well. And so then it becomes more complicated in terms of the council's budget position. Also, there is a sort of mini freeze on structures and restructurings as part of the, you know, we haven't got through the full restructurings following the unitisation, but they're on hold whilst we work out what the council might actually look like when its budget is its size is shrinking a little bit, and none of that's helpful. And all of these things, I suppose my other point was, I always said it made sense to wait till this point, because 18 months ago to do a restructuring to go into unitary probably didn't make much sense. But there are moving parts that make it complicated. There's also a moving part about resources and additional tasks that might or might not come into the team, and I'm working through discussions on that as well. So the answer is those discussions are very, very live, but I cannot guarantee any specific outcome, because there are lots of moving parts and lots of things that work. But I have the tiers above me are aware of the weakness.
Well, we'll probably ask you that question every time we meet, and just, you can let us know how those moving parts are moving.
I guess it's important as well that those people know, and I'm sure they do, that we're talking about it. We are
Yes.
concerned about it, because you are the face of
Yes, yes,
Somerset County Council
yes.
pensions investments, aren't you?
And yeah, in any private organisation,
Yeah, I'm
there would
sorry
be
that
key
I didn't
person
say so.
insurance.
I
There
could
would
have got
be.
you something nicer to look at.
Yeah, in any private organisation, there would be key person insurance, wouldn't there? And but yes, it's on our radar. We'll ask you every time we meet.
Well, and explicitly, it is on the risk register as well.
Yes.
So,
Yes.
and I think I have said in the past that although perhaps suboptimal, if I were to find a nice bus to walk out and on my way home today, that there are effectively, I think the most likely outcome would be a use of consultants in the short term to get from A to B.
Yes.
And that's in no way, shape or form ever a good long-term solution. But yeah, in terms of
Yes.
making sure the fund functions and meets its regulatory
Yes.
needs, then the use of additional outside support than is normal currently would be the obvious.
Yes, so
route.
that would get us over
hump.
a very significant hurdle. But also on our radar is the longer term succession planning that we will have to do. Yes.
I can confirm that I've not been offered a wonderful salary or job elsewhere as of
Thank you
yet.
for sharing that.
Perhaps you could come back as a consultant.
Okay, I think that's the end of our discussion on the risk register. So our business plan update, have we got anything to add to what we've already talked about in terms of training or anything else that we want to add into our business plan?
Please, someone remind me that I've got an item for GDPR audit findings on the next agenda.
Okay, so
I need to-
GDPR, yeah,
I need to. It won't appear on the business plan because it's for the next
yes,
meeting, but
yes,
so that is now in there. And within the committee's
yes,
forward plan is the comms strategy. So
yes,
I haven't put that on your meeting plan, but it will appear somewhere.
yes, yes. And presumably on both our business plan and the committee's business plan, we've already talked about the training that will go alongside our refresh of the investment strategy. So presumably something will fall out of that that will need to be discussed at either committee or board.
Yes. So I suppose 2 points on that is firstly, whereas within your papers, there is just a meeting plan effectively.
Yes, yes,
Within the boards, there is also a sort of
decision plan.
a decision,
Yeah.
Yes. Decision plan.
Yes.
And so that item is on that decision plan.
Yes,
Unless the board or committee particularly wishes something to be put in a formal meeting beforehand, I would expect that to come to the January meeting of board next year as the
Yes.
first point at which it is it comes to a public meeting.
yes.
Obviously, that's not quite on your meeting plan yet.
Okay,
So as I roll it forward,
yes,
or is it? No, because I do. Oh no, it is there because I do 4 meetings. So I should have actually included it on the January 2025 TBC.
so that will be where we formally talk about investment strategy. Yes,
That would be my anticipation.
yes. Okay,
Obviously, all things are always slightly flexible.
because something might
Um,
happen.
And
Yes.
for the benefit of the board, I'm just going to throw a question at our support officer. When are we expecting the dates beyond the April meeting?
We've already started putting the calendar together, but it hasn't been released yet. So we are busy discussing amongst ourselves if the meetings suit us, but all the ones for pension are going to stay the same cycle, committee and board, unless you want to tell me that you would like to change that.
I know that I think it was last year when the 23-24 calendar was released. Some of the committee dates were not on a Friday, and the committee specifically asked for them to be moved back. So I think we've already effectively had that feedback cycle, and unless someone in the room wants to disagree with me, I think we're already content with where our meetings are, and would very much encourage them to stay as Friday mornings, it broadly the same windows.
That is what I anticipated. I do have the calendar already. I can share it with you.
You want to ping it to me and
I
then
will.
I'll
and then
just,
on a
I'll double
Friday.
check them all.
Yeah,
Okay.
And then they
Don't know
should
if
be
I'm allowed
released.
to, you know, I mean, it's not out generally yet, but I'll share it with you and you can have a look.
Yeah.
I think that would be useful, just, you know, because I'd hate to miss a meeting because of a holiday. So if I could just make sure that the dates are,
Yeah.
Okay, I'll send
Yeah.
it along.
that would be great.
If they're in a particularly different window when Debbie pings it to me,
Yes.
I shall point that out to her.
Yes. Great. Perfect. So I think we're finally ready for agenda item 8.
Yes.
So Rachel and Shirley, our review of the pension fund administration strategy.
Hello again. Hi.
Hi.
So this is a verbal update. The reason being for that is that the consultation of the strategy ceased on the 31st of December. We've been busily going through the responses and looking at ways in which we can either revise the strategy or providing response, a response if we don't think the strategy should be changed, and also looking at ways that we can maybe change some of our processes to allow both parties, ourselves and the employers, to move forward in time with the disclosure regulations, but in a positive way that will benefit us all, basically. The revised strategy, we informed employers at our November meetings that we were looking at revising the strategy, and then the consultation launched on the 16th of November, and as I've just said, ran to the end of December 23. There is a link within the committee papers to the strategy. I'm hoping that you have had a chance to look at what was proposed. The main updates to the strategy encompass the implementation of a new communication policy, which would run alongside the fund communication policy, which Anton would look after. And I also introduced a charging structure for underperformance of employers, which is permitted within the LGPS regulations. And we do make, we refer to it in our current strategy, but what we haven't done is actually implement any of the charges, whereas we believe by adding this charging structure, it is more transparent to all parties of the possibility of charges applying. I should reiterate that our main core is to engage with employers and offer them support and training as required. And charging isn't something that we had wanted to do, and hence why we haven't done it until today, or looking at introducing it until now. What we've done before, where we've been working with employers, the fund employers have all, if you like, been paying towards our assistance and pushing forward of the employers that are underperforming, whereas we believe it should maybe move direct to that employer concerned, especially as in some cases there seems to be a lack of engagement with some of the employers concerned. What I can tell you is, as at December, there were 1,217 cases outstanding with employers from the Somerset Fund, and that was across 141 employers, but of which 43 employers had 10 or more cases outstanding, and out of those 43, 12 had more than 20 outstanding, and 2 employers had more than 60 outstanding queries. Now, with these outstanding cases, it meant that depending on which part of the disclosure regs they come along through, that we are not going to be able to meet our targets for the disclosure regulations, so are subject to certain fines. But more importantly, it's not giving the scheme member a good service, and that's what we're trying to do at the end of the day, is to look after the scheme members as well.
So
We-
just to interrupt you there a moment, Shirley, because it's pressing and I've got to ask my question. So I suppose it's difficult if you start charging for your services, your training and your support. That's going to provide a disincentive for those employers that aren't engaging anyway. So is there a correlation between, if you like, your lower performing employers in terms of how much support you have to give them? So if you start charging for your training and your support, that's just going to push those employers that aren't engaging well with you at the moment further away. Is that the danger?
Sorry, I couldn't have explained myself properly. We won't be charging for any training or support we provide. It's more that if people are outside of our timescales and they are not, we've sort of like chased that information, and we've done like several chases in the past, and people still aren't coming back to us. Or what they do come back is that they've changed payroll providers and they can't get that information anymore. And so it means that we then have to work out, looking at our records, and assume certain things for the scheme member as well. Now, if we have to assume that there are, following McLeod, the LGA have actually given some guidance on cases where some information is missing, which we can sort of follow a bit as well, but it also impacts fully on the team in how long a case takes to do. So it's not for the general support and training, that will continue, and that is our preference. It was just for cases where things impact further
I understand. So, you know, if an employer is not providing the information that you need, you're having to do additional administrative work in order to find out that information, and that obviously has a cost associated with it, and you would pass that on perhaps to that employer so that you don't have to bear the costs, that it rightly goes to the employer instead. Is that the case?
That's what we're sort of looking at. We have got a schedule of standard charges that we've put together, and this was put together whilst looking at other existing strategies across sort of like local government administration authorities, and also speaking with some of those authorities as well. So we've learned that as you will appreciate now, with like admission bodies and academy trusts, they are across admin authorities now. And those that are in our fund, but also in another fund, they've been fined once from the other fund for their end of year data, for instance, and now they keep that data going to that fund on time, whereas they're always a little bit late in providing it to us. And so you've got that differentiate. You know, they're obviously going to do the ones that they get charged for ahead of ourselves. So our scheme members are sort of losing out in that way as well. So we're trying to sort of like equalize the playing field, if you like.
So you've almost got like a carrot and stick, haven't you? You've got your carrot of here's all of the training and support that we provide for you, and that's free of charge. But the stick is if you don't give us the information that we need on time, here's the stick of a charge that we will apply. So there's you know, you're working at the problem from both ends, if you like.
Yeah,
Yeah,
and even when we're introducing the fees, if it goes through, is that we also will have meetings with that employer. You know, they could possibly have their fees stopped or reduced if they engage with us, and we have a document that we've prepared to sort of like put down the issues and also look at how we're going to them forward and resolve them, and the time scales that we would like it all done within. As in sort of like you've got a backlog, we need it done within a month or something like that. You know, we'd work with that employer to move that forward. Whereas currently it's just a repetitive sort of chasing exercise that
yes,
just gets ignored.
yes, yes,
Or it seems that
yes,
way. It may not be intentional in any way, but you know,
yes.
and certainly other employers do provide that information on request in a timely manner.
Okay, okay, so
So
that, so you came up with your revised strategy, your proposals, that went out to consultation. Did you get overwhelming responses to that consultation? Were you, did lots of people come back?
I can safely say that is no. Obviously, it is because everybody thinks it's wonderful. Is the assumption, but no. From the Somerset Fund, there were 19 responses, and approximately half of those have Somerset Council as their payroll provider. So their response was that they're aware of their responsibilities, but they will stand with the response from Somerset Council, especially in relation to the fees sort of side of things. We also have had a meeting with Somerset Council as well last week to just discuss things a little bit further. So through there, we're sort of like just looking at different ways that we can look at things, which is what we're going to take to the offices of the fund to see whether they're in agreement, and before asking Anton to send any revised documents out to yourselves to review ahead of it going to committee for approval. What I would say as well, one of the things that we are introducing in April as well is the employer performance reports. So these are going to, they've been worked on with Devitt audit team at the moment to provide sort of like a tool for us to be able to look at how well or bad an employer is doing. You know, it's not all about picking out what's going wrong, and we need to see what's going right as well and acknowledge that side of things. And we're also looking at not just sort of like starters and leavers and changes, but the end of year process, the monthly returns that we ask for, you know, how is all of that going? Will all be part of that. And what some of our employers are saying is that it will actually help them having that report go to their higher management so that they can see if resources are needed, or then if possible to help them, like their colleagues, do the work that we require or change the system slightly to assist them. Obviously, we're very much aware that everything is tight at the moment budget wise, but we're trying to introduce this really to push people to engage more with us, but also you know, to make it, to try and get scheme members the service that we would like to give them going forward, really, and also make sure that we tie in with the disclosure regulations as well, which is our, like, you know, fallback. We'd like to do things faster than that, but that's our fallback.
Yes.
So I think I'm just looking at my notes. What else have I said or not said? I think that's the
great,
main
Shirley.
bit for the moment.
That's great. Any questions for Shirley? Rachel?
Not a question, Anne,
Yeah.
just to say that Somerset council has responded, and I think it's fair to say that we've got concerns about the strategy. So very much awaiting. I wasn't here to do that engagement
Yes.
that Shirley mentioned. Very much waiting to hear the sort of feedback.
Yes,
And the key concerns really were about the timescales
yes,
and whether it was disproportionate charges to incurred. So
yes,
where we tried to compare to the requirements of the pensions that they had to do, and was it proportional if they had 3 months to do something to charge us if we didn't respond in a month?
okay,
And it was that sort of thing. So yeah, Shirley and I will, I'm sure, discuss it at length.
yes.
further and hopefully reach compromise. But
Yes,
certainly
that's
we
fair
had
to both
certainly
parties,
We
yes.
had some significant concerns about the payroll calendar.
Yes.
So providing, as a very short example, you don't go into the detail, but it's a very short example, notifying of leavers within 1 month. But if a leaver starts on the 28th of the previous month, they probably won't be paid in that payroll month.
Yes,
So therefore, we are never going to meet the
Yes.
criteria because the report isn't produced until after the following month's
Yes.
payroll is closed.
yes,
So I'm sure we're not going to get charged for that, but I think that's where
yes,
that understanding of employer systems needs
Yes.
to link in with that charging and fee
yes,
strategy.
yes, yeah.
Can I just
And so,
come-
yes, Charlie, yeah,
and then we've taken on board what Rachel has just said. Within that, the disclosure regulations are very clear on how they look at leavers. So if it was a retirement case, we have to get information out to, say, those that are under state pension age but over 55 within 2 months of their leaving date. So if it was that case, if it comes in like a month late for that, if that 28th leaver we didn't get till the end of the following month, that would give us a month, which if all our employers did that, that is more difficult for us to manage the demand to get everything out within like a 1 month period rather than the 2 months. But for those that are retiring at state pension age or later, we actually only have a month from their retirement date to get that information out to them. So as well as, so in that example, that case would be over the disclosure regulations to have had their information. But likewise, we have this similar sort of problem with a person who left the first of the month, but doesn't get paid to the end of the month as well. So it is a very difficult balance to match, I think is what, and that's where we need to try and work it all out, I think.
yes, yeah,
And also where you'd expect a member to be engaging that's their position.
Yes.
So that something can potentially be done. So whereas they might not have engaged at all, they just go and expect everything
Yes.
to just happen.
yes,
And we wouldn't be thinking as an employer at the time we're processing that leaver on the first of the month, which we might not process until the 18th of the month,
Yes.
that actually they're over 65 at that point in time until we run our reports to tell us.
Yeah.
So it's one of those vicious circles of how do you balance it? And I think it would be very unfair to charge an employer
yes,
sort of thing. So it's all for discussion.
It's-
and but I
it's
think
all
this
for-
is where it'll go through the mill and
yes,
Yeah.
and
I'm
it
sure
might,
there'll be some changes on.
and it may well
compromise.
be that there's, like standard charges that apply, and then discretions that can be applied against those standard charges in exceptions or in difficult circumstances. Yeah, I'm sure it'll all come out in the wash, as they say. Any more questions for Shirley? Thank you very much, Shirley. And Rachel, if you're
Thank
still
you.
there in the background as well. Thank you very much.
Thanks.
I think that's brought us to the end of agenda item 8.
So
And
just to clarify on that though, because of the timescales involved, the plan is that it will not come back to the administration strategy as revised or not, will not formally come back to board before it goes to committee for signing. That's the current plan, because the plan is to have it agreed by 31st of March.
yes,
Appreciate it will be provided to you informally, and if necessary you can come to committee and berate them to not accept it. But yeah,
yes,
that is the sort of the business, the workflow plan
Yes.
currently.
yes. Oh, yes, that's fine. We can work with that.
And
Yes.
actually, Shirley's still there, I assume. Yes. Just to clarify, Shirley, I presume it is still your intention to try and keep the Devon and Somerset agreements aligned, and so you're trying to balance taking the Somerset feedback and seeing whether you can apply that to the Devon strategy and vice versa.
Yes, that is the same, just like with the actuary sort of side, try and
Yes.
keep it
Yeah,
simple
so
if we can.
effectively there's two sets of feedbacks coming. There'll be feedback from the Devon Fund, which they will try and need to represent in our admin strategy, although it's maybe something that no one in our fund raised at all. But hopefully that also means that they've got a wider set of views about this fund than just the Somerset
Yes.
about the policy, rather than just the Somerset respondents, which probably is in a general sense is good.
Yeah, it's sort of
Yes.
doubled the responses, is what I would say.
Good. Somebody's engaging anyway. Yes, good. Thank you very much. I don't think there are any other.
Something up under any other business.
Yes.
It was just basically that I attended that conferencing in December.
Yes.
And there was a suggestion being made that perhaps that old age pensions might be reduced at some stage in the future. And the only part to all this, obviously we're concerned about people's pensions, is whether there's any chance or possibility in the near future of a review of the current rates, because what appeared to be suggested was that that the sustainability of old age pensions would not retain the current level. And in fact, our pensions in Europe generally are actually a lot poorer. But it then comes about, the suggestion is whether at some stage we might be in a position to review the current rates. And you might well say, well, this is pure speculation, but a certain right-wing newspaper, I forget its name, actually mentioned this, about the fact that pensions in the future may not be sustainable, and in which case people should be encouraged to take up other sources of investment. It's just really a comment, really, and where it is only speculation, but the fact that it's being reported in a major newspaper, it is a little bit concerned. I mean, in my case, I mean, I'm in my 70s, so it's not really much. It may not affect me, but it will obviously affect someone like Anthony in the future.
So yeah, well, pensions are expensive, and the triple lock on the state pension
Well, that
is
that'll go.
expensive.
That will certainly go. But it was more that I'm concerned, obviously, about existing pensioners, and obviously, if there is a possibility that they can actually increase their pensions in some way or other. I mean, you used to be in a position, I know in some departments, where you could actually buy extra years, but obviously you can't do that beyond a certain level. You can only do it up to a certain. And it's just really whether did anyone know when these things are going to be looked at again?
I'll do what I can. So my understanding is that the state pension, which obviously is not the prerogative of this committee or anything, is reviewed on a cycle. I think we've just gone through a review of the state pension age, or I can't remember if it was deferred. And obviously, part of the issue, I would suggest, is that there's politics involved as much as sort of good planning for long-term financial security. And the triple lock in particular is hugely political, because certainly it doesn't seem to make sense that pensioners should be rewarded above the general population.
That's right.
And it is unsustainable. There's no doubt that the mass of it are unsustainable. In terms of the LGPS, I have heard no whispers at all about review of benefits, contributions, or any other part of it in that sense. So there was a very in-depth review done kicked off when the Conservatives came to power in 2010. They appointed Lord Hutton, who was a Labour peer, to do a review of all public sector pensions. And he did that, and that effectively led to the 2013 changes to the scheme rules, which were implemented from the 1st of April 2014. I'm sure at the time that was done, someone used the phrase generational, or, you know, my understanding was the plan behind that very much was this is something we're going to do now, and then
We won't have to do it for 30 years.
well, I don't think there was quite that, but certainly there was no ambition to go back to it since. I've certainly seen within the Conservative Party absolutely no ambition to touch that again. Obviously, we get an election in the next 12 months. I shouldn't say this year, because I think technically there is an ability for it to be in 2025.
Yeah.
Who knows going forward longer term, but I'm not hearing anything on the grapevine. And similarly on other sort of parts of that government agenda and things that they are in, we also get whispers and rumours as to areas where actually the Labour Party are broadly in line with the government. So don't expect this to go away after an election because Labour agree. Or you might get a whisper saying, no, Labour don't agree with this, or aren't interested in this part of the agenda. So you sort of look at that and think, well, if they don't push it through Parliament pretty quick, that's going to disappear. So, but I'm not hearing anything. I can see Shirley's got a hand up, so I don't know whether Shirley's going to disagree with me and say she's hearing whispers all over the place.
No, I'm not going to disagree with you, Anton, at all. I was just going to add that within the current legislation, LGPS legislation, when there's when the scheme is looked at nationally, which is sort of like every 3 years as well, if we have a cost cap mechanism within that, and if it goes above certain amounts, like 2% on what we currently have it as, then there is possibilities that the structure could change, or the rate of the care amount, which is currently like 1/49th, that could alter if it's deemed to be, if we break that sort of like over that cap. And it can be either we go 2% under or 2% over as well. So that, if you like, is already born in there. And I was just going to mention that the plan is, I mean, our regulations already state that we tie in with the state pension age to allow for the changes in the state pension age throughout the years. But also currently, you will be aware that the earliest somebody can retire is age 55. And they're looking to change that to 57 from 2028. But there's also discussions about whether any protection should already be in place for those of us that are already in the scheme. So that's all sort of ongoing in the melting pots at the moment.
And just to pick up on that, because it reminds me of a couple of that last thing, I think actually they're looking to harmonise that as 10 years below state pension age. So I don't think they're specifically talking about making it 57. I think they're talking about 10 years,
a sliding scale.
10 years below state pension age. I'll also point out that we have already had one review under the cost and cap mechanism. It actually found that the benefits were insufficiently generous under the COP and CALA, which I think was an outcome that no one really anticipated happening. And there were proposals to bring it back in line that were going to make the scheme slightly more generous on the benefit side. But then McLeod blew up, and I think eventually, I'm a bit hasty, but I think eventually they decided that because McLeod would make the scheme more expensive and beneficial to members, that would bring it,
Cancel out the.
yeah,
cap thing.
and so they wouldn't implement the things that they were talking about. But as I say, that's just my sort of vague recollection of things that mostly happened about 3 years ago. So if someone wants to disagree with me, I could easily be wrong.
Rachel,
Just to say, I think as well that when we come to the comms stuff, the additional benefits that people in obviously currently contributing into the scheme work, in respect of AVCs, and particularly shared cost AVCs, where you can save tax and national insurance on your contributions, should be much part
Yes.
of those comms to show people how, because the problem with the career average compared to final salary is it's only a career average,
Yeah.
isn't it? So if you start low for several years and then go higher, you've still got that low bit at the beginning. And I think ABCs are something that we should really promote
yeah.
far better than we do.
And I suppose then comes the problem of we cannot give advice,
No.
even though it's a really good idea. We can't say it's a
Advice,
really
but
good
we can
idea.
highlight the benefits far more than we do
Yeah.
through our normal
Yes.
communications, I would say.
Because there are benefits, and one of them we've talked about already is it's that burden of risk, and I think that's one of the enormous benefits of a defined benefit pension scheme that people don't understand because they don't understand risk. So therefore they don't understand that burden of risk.
Yeah, if they make AVC contributions, they don't come into our fund. They do
Yes.
go into a DC pot.
Yes. Yeah. But yeah. Excellent. Right. Just over the 2 hours. I think I am going to draw this meeting to a close. Thank you very much. And our next meeting, Debbie, could you remind us what our next meeting date is?
15th of April.
It's the 12th of April.
12th of April. I shall enjoy seeing you all on the 12th of April. Thank you very much. Thanks. Bye.
Ta-ra.